Valutrades, Forex CFDs and commodities.
So welcome to this webinar. We have the 19th of September, Tuesday. I'm greeting you here from London, from the UK headquarters of Valutrades. And tonight it will be myself, Malte Kaup, and our guest speaker and professional trader, Daniel Schütz, who is based in Germany. And I think that's very relevant given the topic. We will together guide you through the topic. Again, quick audio check. Daniel, can you hear us?
Hello and good evening, and Malte, thanks for having me here tonight.
Brilliant, thank you very much. I can hear you loud and clear. Guys, before we go into the topic, quick risk disclaimer. Look, you know that trading with CFDs has inherent risks, right? We're talking about these leveraged positions and markets can go against you. And so please familiarize yourself with the risk profile of CFDs if you are unsure about it. And the ladies and gentlemen at Valutrades are at hand literally 24/7 to help you with any questions you have. And please make sure that you have read the risk warning in full, because what we will be discussing, as always in these webinars, will be very explicit, in our views on the market, but nothing should really be seen as an explicit trading recommendation, because at the end of the day, you and yourself are responsible for your trading decisions. So that's something we can't take away from you. But again, as I'm based in London, and Daniel, as he's based in Germany, we're very happy to give our very clear opinion on what's going to happen. And the topic today will be, because I think it's one of the key topics or the key news events for the year, is the so-called Bundestagswahl in Germany, or the so-called general election, where we see if we get another 4 years of Angela Merkel or not. And maybe some of the things, I will warn you already, because I've had a quick chat with Daniel before this presentation, a few things may surprise you and maybe have an impact on how you position yourself in the market. Let me just start the proceedings by just giving you a very quick round of introductions of the political landscape in Germany. And I'm pretty sure that not everybody is familiar with every party. So I will make some comparisons as much as it's possible to the UK and the US party landscape. So maybe that helps. So number one, we have Angela Merkel. She's the leader of the CDU, the Christlich-Demokratische Union. C stands for Christ. So that also gives you an idea of kind of the core values that she embodies, and she has been the chancellor for many years. I think for 12 years now. Only her mentor, Helmut Kohl, has been kind of longer in seat, with in total 16 years. Then we have the CSU, that's also sort of called the sister party to the CDU, and that, together you will see that in our kind of analysis, they're called the Union, because they are always together. That is like, you can see them as one. The CSU is really happy right now. Why? Because we have the Oktoberfest, the Bavarian beer festival in Munich right now, so you can be sure that everybody is in high spirits and will make the cross at the right place for them. So the gentleman who's leading that is Joachim Herrmann. Then we have another chap, Martin Schulz. He's a bit like Jeremy Corbyn. You can probably compare him to that in the UK. He leads the SPD. It is similar to related to also to the Labour Party in the UK. Martin Schulz is a bit of an interesting candidate, similar to the UK, the SPD, the Labour Party of Germany. Have been struggling in recent years with the numbers, not least because there is a large coalition or a grand coalition with Angela Merkel's CDU, and grand coalitions never work well for the smaller party, and that's something that we also seen here with the Liberals in the UK, because they're pretty much not relevant anymore after the grand coalition. Martin Schulz is a bit of an interesting and an odd one, because he's not a career politician in Germany. He has been the mayor of a city in Germany called Würselen, and then he made a move over to Brussels to work in the European Parliament, and basically his contract ran out, right? And he was pretty much out of options. And then suddenly the SPD came to the idea of a conclusion that they should make him the main candidate, which is a bit of an odd choice when you think about it, because he's definitely not a natural choice. It also shows you probably a lack of candidates they had available to run with, because the other logical choice, the guy was so unpopular that he kind of himself pulled back. Then we have Die Linke, that's the left-wing party with Sarah Wagenknecht and Dietmar Bartsch, and kind of that has kind of its roots in the communist times in Eastern Germany. A party, I think it was called SED, but obviously the shape of the party has changed. But what they represent is kind of the more left-wing side of the spectrum. Something that people in the UK don't know, and I have not seen that in the US to be relevant at all, is the Green Party. In Germany, I think since we had acid rain in Germany in the 80s, the Green Party really came through, and it is now a household name in German politics. And one minister even kind of rules Baden-Württemberg, the state where all the car companies are based, apart from BMW. So that's Katrin Göring-Eckardt and Cem Özdemir. As you can see, also kind of somebody with a Turkish migration background is leading that party. That tells you obviously also a lot how they think about immigrants. And then Christian Lindner is the leader of the Liberals. The Liberals, similar to what we had in the UK, almost disappeared from the scene and really struggled to get above that minimum threshold that we have in Germany, which is at 5%. If you as a party achieve less than 5%, you will not make it into the parliament or in the Bundestag, as we call it in Germany. And finally, we have a lot of national tendencies seen right across Europe. We have Wilders in the Netherlands. We have Le Pen in France. We have UKIP in the UK. And so we see that pop up everywhere right now. And we also have that obviously in Germany, and that's Alice Weidel and Alexander Gauland. And they represent probably the opposite to the left party. They represent as the alternative for Germany. That's what AfD kind of translates to. They present the right-wing spectrum. And I think what everybody, when we go a couple of months back, what everybody was afraid of and worried about is that the right-wing party, in that case AfD, would kind of gain in votes so much they would have an impact on the political landscape in Germany, and finally trigger a change in Germany's view on Europe. And so there was a couple of months ago some polls indicated that they could achieve as much as 14% from a standing start, which is obviously, that would have been a very powerful number. And if the other, you see there is quite a diversity in parties, right? If the others kind of lose out, suddenly when the AfD becomes a power in some shape or form. Right now, it's definitely not a coalition partner anybody would want to take serious. But if the AfD's votes would have an impact on the German landscape, that obviously, as Germany being the engine of Europe, would have a massive impact on the markets, right? On the stock markets, and obviously also on the European currency. So hopefully that was 10 minutes or so. That was a good introduction into the landscape there. And as you can imagine, Angela Merkel is still kind of considered to be fairly strong. But maybe with your help, Daniel, we can kind of shed a little bit of light into the different scenarios, because that's what we're doing as traders, right? We're not having a political opinion, right-wing, left-wing, or whatever. We're trying to establish what are the most likely scenarios that we'll see come the election on Sunday, and how will the market then react to those scenarios. So let's maybe first work through the first part of the equation. What kind of scenarios can we expect on Sunday? What do you think?
I think in general it's very interesting, this election, because currently there are 4 party blocks present in the German parliament, We have Chancellor Merkel's Conservative Party with the CDU, and you already mentioned it, the Bavarian sister party, the CSU. We have the center-left Social Democrats, the SPD, with Merkel's closest competitor, Martin Schulz. And we have the Radical Left Party and the Green Party. These are the four party blocks we have at the moment. And we expect an unprecedented parliament of 6 parties. I think it's the first time in history that we have that. And yeah, history after World War II. 4 minority parties are polling around 10%, and that's the interesting part. So the race on the first and the second place, it's almost done, I think. But on the third place, it's becoming interesting. Who will get the power to be the party within the coalition? And that is what we should take a look at. So I think we have another slide showing that.
Yeah, just before we go to that, just to give everybody in this webinar an understanding how the candidates look like. So these are not pictures, obviously, but just to give you a bit of an understanding who we're talking about. So on the top left, we see Sarah Wagenknecht, you know, in her traditional red outfit, as you can imagine, that has basically some communist roots. Then we see Cem Özdemir, the leader of the Green, or one of the 2 leaders of the Green parties, next to Miss Eckhard Göring. And then kind of in the middle on the right with the blonde hair, that's Christian Lindner. He likes to kind of depict himself, you know, in black and white pictures right now all over Germany with a unshaven face. And then on the right, quite fitting, I think they've done also a good job at showing the political spectrum here in this caricature. Mr. Luff has done that. You see Frau Weidel and Mr. Gauland on the far right, and Gauland is definitely also a highly debated person because he sympathizes with people who have really Nazi right-wing views. You know, he doesn't consider himself to be that person, but there's a lot of criticism that's based on this discussion. And when you look at the bottom row, again, I jump to the bottom left. We have Mr. Bartsch, again, a left-wing, the co-head of the left-wing party, and then next to him with a beard, Mr. Schulz, our friend, and followed by Angela Merkel, and finally from the CSU, because the CSU is always a little bit more conservative. That's why that's why his picture has been put to the right of Angela Merkel. So when you look at the picture, that gives you an idea, you know, who are the people, and the person who has done this has also done a good job at putting them along the political spectrum. But back to the point you made. And you know what? We can first have a look at this, and I know you've also had a look at today's chart. I don't think we have it in this presentation, but we can talk about how actually today the numbers have changed. But maybe you can kind of walk us through a little bit through what we are seeing here.
Okay, I think for first understanding, we have to make one point clear. I think only once since World War II there has been a single party won the right majority. So parties usually come from a coalition, and the coalition representatives, they elect the chancellor. And so Merkel's party at the moment has a stable lead in the polls, and currently Merkel's party is in a, how you call it, a grand coalition with Schulz's center-left party, the SPD, and neither of the parties is really happy with that arrangement. And to get a stable majority, the parties have to get into one coalition. At the moment, you see it in the black. That's the Union, and the SPD. That's a coalition nobody is really happy with. So we have several possible coalitions that can happen, and one that's a neutral, can you say neutral? The neutral way, that would be if we're going further on with a great or grand coalition. So that shows stability. People know what will happen, and Angela Merkel will still be the Chancellor of Germany. So the good connections within Europe with France and all that would be stable, and it would just go forward. One of the not that good outcomes for the markets would be if there would be a coalition between the CDU and the Green Party, or the CDU and the Green Party and the SPD or the FDP. That's something people are a little bit afraid of, because it shows uncertainty. The parties itself, they don't come along that good together, so people don't know what will happen, and that's a sign of unstable. It's unstable. Help me, please. It's
yeah, that's exactly right. That would be quite an unstable scenario, because what markets, well, in a way, markets love uncertainty and instability, right? Because it also gives an opportunity to trade, because that in turn then creates volatility. But again, I can just reiterate what Daniel has said. And on the bottom, you see the große Koalition, the grand coalition between the Angela Merkel's party, highlighted in black, and the Labour Party, the SPD, highlighted in red with Martin Schulz. And if that comes through, and then we'll have exactly the continuation of what we have right now, because we have what's in Germany called the GroKo, the Grand Coalition, and there would be absolutely no change. You're right, the market would see that as continuation, and that would really remove risk from the market, remove risk from Europe. And in a moment we'll have a look at a chart, and I think there will probably also be some surprises when you look at how markets typically react to that kind of scenario. And on top of that, what we call the Jamaica coalition is Angela Merkel's party in black, then the yellow one is the Liberal Party, FDP, and then on the right is the Green Party, and that creates a lot of uncertainty, because the Liberals and the Greens don't get along well with each other, right? That would be quite some political dynamite, because we're not just talking about some federal state in Germany, we're talking about the Bundestag, the big thing, and you would see probably then somebody from the Liberals as our Minister of Foreign Minister, and maybe the Greens, I don't know what kind of ministry we would get, but they would play a powerful role, and they would then probably be a lot of potential for conflict in positions. Markets don't like that, and there would a lot of questions being asked immediately about Europe. If we see kind of the Union Liberal scenario, the yellow-black one, I think that would instill a lot of confidence in the German market, that not only we would have continuity, but we would also have a more liberal, market-focused political agenda moving forward, and I'm pretty confident that that would drive stock market prices in the medium term, at least, up, and something we are aware of that it's already happening. It's kind of a green-red combination, but that's fairly unlikely, I suppose, when we look at the general election. I think these are probably the more possible scenarios, with the Jamaica coalition and the Grand or Große Koalition, as I've written it here, being the more likely outcomes. But in our kind of conversations that we had leading up to this webinar, Daniel, I think you pointed out something that I personally didn't have on my radar, and you pointed out a scenario where Merkel would not win. How would that play out?
Yeah, if we take a close look at the SPD, the Labour Party, and the left-wing party, if they come together and get the Green Party on board, they maybe, nobody knows, but they maybe have the power to rule, and that would be definitely uncertainty in the markets, because nobody knows, it never happened before, and nobody knows how the Labour Party and left-wing party will get together with the Green Party as a third coalition member, and that would definitely be not good for the markets, because you know markets are not selling or buying what happens now. Markets always sell the future, and that's definitely one scenario the markets would not laugh.
That's a really interesting one. I think I make a great point. Markets always discount the future, so to say. When you look at a DAX or you look at a stock, you always anticipate the future developments, the strategy, the cash flows, and so forth, right? And anything that kind of puts that bright picture in doubt will lead you to a more doomy scenario. So in plain English, if there would be a scenario and just SPD wins a little bit more, the left wins a little bit more, and the Greens win a little bit more, and the Angela Merkel's party wins less votes than expected, suddenly they would really have a chance to govern Germany. And suddenly Martin Schulz would be our Bundeskanzler, you know, our prime minister, and that would completely catch out absolutely everybody in the financial markets, and every trader would be positioned in the wrong way. And a lot of things that are now being taken as granted, like have you, in a moment we will look at the euro US dollar, you've seen how we had a nice run there. There's quite a possibility that that move would be reversed very quickly, because we would see a massive shift to the left. In the European Union. Schulz is also clear he would immediately stop any kind of negotiations with Turkey to become a part of the European Union, and further integration of the European Union would be a result. So I would not predict the end of all days, right? We've seen that before. The markets have a setback, and when they come back, because I could also see very quickly a situation where the markets say, like, hold on a minute, Europe is coming together. That is a positive thing, right, for Europe, and they are then clearer on kind of one defense strategy, protecting the borders, hard Brexit negotiations, and not letting Turkey come in could also be seen as a positive. But in the aftermath of an election, and we've seen that with Trump, and we've seen that also with Brexit, that normally creates a lot of uncertainty in the markets, and the way that is being expressed is by volatility, right? So we could see some wild moves in the market.
Yeah,
so thanks for sharing. Go ahead, yeah.
Yeah, it's not very likely that that would happen, because the Merkel party has a real stable lead in the polls. So this scenario we just showed up, it's not very likely.
Okay, but when you think about your kind of your risk heat map or your prediction heat map, that is your low impact, low probability and high impact scenario right there. And make sure that you keep it on your map, right? Because we've seen everything in the Brexit referendum, in the Trump election, and so forth in the past. And I think what you pointed out to me, Daniel, is also a good point. Is that you on the ground, you know, you would sense if there's kind of a different feeling in Germany, and the polls are completely off, like exactly what we had in the UK, right? When we discussed it, it felt like the polls are completely off, and the kind of the word on the street was very different and very much geared towards a Brexit scenario. And look what we got, and it felt the same, I would say, also in the US. So if we factor all that in, and if we just come to our senses, it is highly probable that Angela Merkel will win, and we get one of the two coalitions, Grand Coalition or Jamaica. But please don't forget to plot that low probability, high impact scenario. And before we go into the charts, and I know you have some points, it also obviously has some impact on the position sizing.
No, we have a big majority of people at the moment, they are undecided what to vote. And if you take a look, the election day is on Sunday, and they still don't know what to vote. And those people, they are very interesting for the parties at the moment, because they want to bring them on their side and want to vote for them. And the one who wins the election will be the one who can get to those people who are undecided at the moment. That's the big point at the moment.
Yeah, I've read a statistic that a third of the people in Germany are undecided. So
that's
Daniel,
right.
You better make your mind up quickly. So I know you're coming to London soon again.
I have to. That's right.
Yeah, you have to do that, right? Because you have to vote via letter.
I have to, yeah, and I have to fill it out tomorrow. So I'm also one of those persons who don't know what to vote, because in any constellation you will give your vote to Angela Merkel. Okay, except if you vote for the right and the left extremes, but within the normal spectrum, you will give your vote to Angela Merkel, because she's leading, and people seem to be happy with what she's doing at the moment.
And I think also one difference and one point I want to make. I live now for 11 years in the UK, and I see, how UKIP and a bit more kind of nationalist views are definitely more mainstream here compared to Germany, because where in Germany you grow up and you get educated in a way that something really bad happened in the 1940s, right? And I think that makes it really hard for the people to really put their cross where the AFD is, and when it's more likely that they won't use it as a protest vote and put their vote with any of the more established parties. And even Angela Merkel is now trying to kind of occupy a bit more of the more nationalist views there. But when you look at Germany from the outside, and I'm talking a lot to people here in the UK, and also in general internationally, you hear always like, oh my God, Germany is full of immigrants, and Germany can't do this and Germany can't do that, and how is it ever going to stop? Myself, I've been also last week in Germany, and you are in Germany. It feels very different from the inside, and don't let these kind of headlines fool you that this then suddenly becomes a very probable scenario that the right-wing party will take over, which is clearly not. I think I indicated earlier that we've seen statistics that they get up to 14%. Right now they're at around 8.5%, which would make them still a credible party of 8.5%, and they would get above that 5% threshold. But if you don't get any major surprises, that 8.5% is not enough to have any impact in the 4 years on the policies in Germany. So and we've seen that before. We had parties like, I think they're called the Republikaner and others before. Yep. They come up, and then they make it into the European Parliament as well, because that is a bit more of a protest vote. But then they disappear again as soon as kind of they start fighting and bickering, and the leading figures that have some level of prominence fade away.
Absolutely,
again,
yes.
Yeah, again, we don't want to be the politicians here. We are traders. So in the background, hopefully it's visible now. I fired up a Valutrades MetaTrader 4 platform, and we're looking at our good friend, the DAX 30 on a weekly chart. So let me put it to you, Daniel. So what do you reckon? What could happen?
What do you think if we just take a look at the CAC? The CAC 40 and explain what happened on the last elections in France. I think it was election day was the 7th of May, if I remember right. So before that election day, it was a big uncertainty who will win, Le Pen or Macron, and it was I think head-to-head race, or how you call it, neck-to-neck race. Yep. And people just were going on that scenario that Macron will win that election, and you see it the days before. You marked it with a red sign here. That's election day. That's the day after election. Before that day, the markets start to climb new highs. They print new highs, and that's a likely scenario. You often can see that if the markets prepare for any big event, that the markets go in one direction, even straight high or straight down, and that's what happened here. The market went up, the election day came, and then it's rallied down. Okay, not rally, but markets go down after that event, and that's one likely thing that could happen in the DAX the next 2 or 3 days. So
I also remember that. Okay, so that's a really good example. So let's just step back and summarize what you said. So we had a move up, and as we're saying in trader circles, buy the rumor, sell the fact, right? And that's basically what we have here. The market has moved up, and when we got the election day, and the risk kind of disappeared, and you would expect that the markets actually just boost higher, right? But wouldn't that be a logical thing? So what we're looking at here is now the French stock market, but that's not exactly what has happened. So, but what has happened since, as you pointed out, since May, is that the market actually has created this downward channel, right? And only recently managed to break out of the channel. So if we would just intuitively think about what would happen if a risk goes away, we would think that the CAC 40 is much higher, but it's not, right? And I think that's probably one of the teachings that we want to transfer over also to the DAX when we have a look at it. And I remember also a short while back, Daniel, you and I, we had a conversation, and we also privy to a presentation from a trader who does a really good analysis on sentiment trading, and he was looking at a lot of elections and how the market has moved. So how, if you take a leaf out of that book, what does that teach us for the upcoming election?
okay, we could expect that the markets would climb up to the highs we saw at the beginning of the year in May, in June. That would be one scenario that could happen. So it's not far away. It's about 500 points away. That the next 2 days can get volatility and bring the markets up to the old highs. What happens after that is that people could take their profit out of the market, and the markets show correction of that up movement. But in general, Europe is strong, and the German economy is really healthy at the moment, I think. And we have a GDP, I think, this year of 3.6%. That all could show that the markets could go higher after that election if Angela Merkel will win the election in a good way. So that's definitely one scenario. The other scenario is that the markets, I think, just go sideways, but on my opinion, it's very unlikely. I think we will see some kind of movement the next 2 or 3 days.
All right, so let me just summarize that again, because I think you make some really strong points here. Again, nothing here is a trading recommendation, as I said in the disclaimer at the beginning, but it would not be unreasonable to think that we see this grind higher unless there is a complete surprise poll, and we get an indication that Merkel is about to lose or the right-wing people are about to win. There is a possibility that we just get this grind higher, and when election day comes and we are trying to touch, maybe even break that high that has been printed before, and when the market, let's put it that way, will make a new decision. And it is always tough to buy into new highs. So just from a technical point of view, that could act as really strong resistance. And we could see a scenario similar to what we've seen at the CAC 40. But if I can just for a second just flick back to that daily, you see the volatility that we have had here, right? So we had massive gap up, and then we had a couple of days that really drove a lot of volatility, especially in short positions where people were trying to hold through this. So it is not easy to trade that. So I think something, Daniel, you and I discussed also ahead of this webinar was also a quick remark about position sizing, and
definitely
the question for you: if you expect a high volatility event, what's the impact on your position sizing?
Okay, you always have to watch on your risk and money management at that point. Even every election, every upcoming event in the markets, you should downsize your position because it's uncertainty in the markets. You can expect a down gap or an up gap with a high volatility, and so you always have to be with a low position in the market. I think best example is the Brexit vote, Malte. There were minute candles of 500, 600 pips.
Yeah, over 600 pips. I think the highest one I've counted was 626 pips in a minute.
So if you know there's an event coming up, downsize your position. That's very, very important, because you don't know how it will work in that situation. There's a lot of uncertainty in the markets. You don't know, but if there's a special event, you already know days and weeks before, you have the chance to downsize and to take the risk out of the market. So I think you're looking for that special candle, aren't you? So that's the that's pound against the US dollar, and that is the big candle.
Yeah, that's right. The pound US dollar is really the Brexometer, and that's where we had. And now in a daily candle, it looks really easy. But when you look the structure up in a 1 minute candle, it's actually massively impressive when you see the down moves, but also when bounce backs of 300-400 pips, and then eventually then again the move down. And I know a lot of traders have actually made a fortune in that night. Also, a lot of traders have lost a fortune in that night. This is this kind of volatility. Be really, really cautious, guys. You know, because that can really knock you out of a market if you. I'm not saying if you're not knowing what you're doing, but suddenly, you know, the parameters are so expanded, you know, that that it is really hard for you to make a profit. And when you probably hear from the professionals that they made a killing out of it, but they probably in a better position to get good entry prices and to have the position or the account size, all right, to sustain that level of volatility. And also they are really, really nervous when we're trading these kinds of markets. So probably the key message is be very cool in your analysis. If you want to expose yourself to a gap risk, you know, and yes, enter a position on Friday evening just before the market closes and wait what happens. But what you will not know is what kind of morning you have either in the currency markets on Sunday night or in the stock markets maybe on a Monday morning. Because we had that before, even in the last UK election, which was a massive surprise that Theresa May lost it. We had a 230 pip gap or so, right? And that's the kind of gap, and maybe even more, that you need to factor in as a possibility if you trade this market. So, or you have to accept that maybe your account is being wiped out as a consequence of a gap up. Let's have a look at the currency market, Daniel, together. So I'm now flipping over to the euro-US dollar, and I think if I just set the scene for a moment, it was quite interesting to see that, look, we had this move back down from the 130, 140 levels back down to much lower levels. Everybody and their grandfather was talking about parity, right? That didn't come in euro-US dollar. Quite the opposite came. We saw some bottom formation building, and suddenly a really strong push up. And now we are really testing the 120 level to a degree where people said that was really hurting the German and also the European equity markets, because suddenly the euro started to appreciate so much against the euro-US dollar. A lot of that actually is driven by US dollar weakness, quite frankly, and Mr. Trump is responsible for that. But isn't it interesting to see that the markets edge up to a bloody critical level again, just ahead of the German election, and it will be really interesting to see what kind of result we get, because anything that is being seen as a further integration and strengthening of the European market obviously has a positive euro effect. But even more importantly, don't forget that currencies are largely driven by interest rates, right? And maybe that a positive stable sign would also prompt Mr. Draghi to intensify his language that he's using regarding tapering financial supply to the markets and basically printing money, if you're honest, and embarking on some sort of language that can have us think about interest rate increases in the future. We're a bit away from that. In the UK, that is already something we are talking about. But so that just sets the scene a little bit. Obviously, Daniel, you live in trade in Germany. You're closer to the ground there. So what's your view on euro-US dollar?
Okay, at the moment we're looking at a weekly chart, and I think it's very interesting because you have a real trend in the market, a real strong trend. I think beginning at what is it? April, May, the market breaks out of the little side range, and from that point on, the market just goes straight up, and it's channeling up to the mark of what is it, 120, and that's really interesting because people, as you said, people always say the Euro USD should go down, and they talk him weak, but it's a real strong market at the moment, and the trend is. Yeah, it's a valid trend at the moment, and the trend is valid as long as it goes, and there's no sign at the moment that the trend will be broken. So what can I say? It's a strong trending market, and that's what we like as a trader.
That's right, and you've heard that saying from me probably. The trend is your friend until the bend in the end, right? So I think what's interesting about the euro-US dollar here is that it's finally found its love with trending again, and not in this webinar, but in previous webinars, we've done a lot of technical analysis and backtesting on the ability of certain financial instruments to have a trending phase, and I think this also shows you, if you just kind of move off topic for a second, is that we had a long period of consolidation until we finally got the trend. It shows you how hard it is to do trend trading, right? Because you maybe need to wait for a year until you get that move, and if you don't get it, it will be really hard to turn a profit on a trend following strategy. Just, I think that's a perfect example. That's a perfect example of that. I think another currency pair that is really now in the focus of many traders, because it not only helps you to have a view on Europe, but also a view on the Brexit conversation and the negotiations there, is Euro GBP. Let me flick over to that. And as you know, Daniel, that's one I'm looking at quite closely as somebody who lives in London and earns in pounds, right? And I met you last week in Germany, and obviously that has an impact, you know, if the pound gets weaker. But that is probably my bias I have to deal with. But at the end of the day, what we both concluded is that we are now having a really fascinating scenario in the Euro GBP just ahead of the election. Can you talk us through what you see on the chart a little bit, please?
Sure. Beginning of May, I think we have a short sideward range, and the market broke out of that range, and now he's coming back to that really interesting structure level, and that's definitely a scenario that traders are looking for. At the moment, the market decides if it if this is a support or resistance level for the market. If they support, the markets will go up again. If it's resistance and the market fell through that structure level, there's a chance that markets will test the next support level. I think it's at 0.854. That's likely one scenario that could happen. So most of the time, you already said it, traders are sitting and waiting for the chance to get into the markets. And at the moment, we have one of those chances to go long or to go short. That's definitely one thing we should look at.
Okay, so that's really good news. Thank you very much for that. So we are seeing a retest right now, doing a bit of a bounce at the 0.87 level. We just 0.877 is probably the correct number. We just peaked through the 0.880 level. And obviously, obviously, a move down would be good news. But again, let me just be clear. I'm biased here, and that's why I stay well clear of trading leverage positions of the Euro GBP right now, because I know I would probably make bad decisions, as I have a kind of an inherent interest in the pound finally gaining some strength again. And I think it's important as a trader that you're just aware of these biases, because they make for really bad decisions if you want to have something to happen too much, right? Right. So so just from a currency point of view, let me just kind of summarize what we look at. So we looked at the euro, US dollar, and at that point I wanted to, if I haven't made it clear, I want to reiterate. So what we know from the sentiment analysis is that that we often have in the run-up to an election, we do have an increase in price, right? And then once the election comes and we have the facts on the table and no big surprises, then the price often moves back down. And that's true probably for the DAX. And we used that CAC 40 comparison example, and that could also be a reality for the euro US dollar, right? And as we kind of move into also all sorts of scenarios now with the US, don't forget that this is also largely driven by strength or weakness in the US dollar. I think the GBP USD has had a good run. It looks a little bit overextended right now. Let's see how that continues. I think that's also driven largely by the US dollar situation. And when you look at Euro GBP, hey, if we are honest, why have we seen this setback in Euro GBP? Well, because Mark Carney and his guys have started talking about interest rate increases, right? And it shows you what's really driving the price in currencies. These are the interest rate differentials that we are having a look at. And I'd agree that it is a likely scenario, again, no trading recommendation, that from that point of view, that we continue to see some strong rhetoric coming out of the UK with 2.9% inflation, and probably some ongoing whatever it takes language from Mario Draghi, which would have the impact on the market that Daniel was just pointing out. If you could actually see a leg lower down to 0.85, hallelujah, if that actually is happening. Let's probably conclude this with a view over to the US, and obviously any closing remarks, Daniel, you may have to this presentation. So if for one moment we just look at the German election and say, like, okay, this could have global impact on impact on the market on a global level, and we look at the US markets, what do you think? Have we hit the top?
That's a hard question. I don't think that the German elections have any impact on the U.S. markets. That's the first thing. But if you take a look at that chart, it's just could you please point out the election of Trump? I think it was in that. When was it? Could you find it? Since election day of Trump, the markets are just climbing up and printing new highs. That's so impressive. Yeah, here we are at that point. And then the market's printing one new high after the other. We have a trend, we have an uptrend, and the trend is still veiled. So what else to say? Stop trying to short the markets until there's a clear sign to do so. And there are a lot of traders who always try to short the markets, but there is no clear sign at the moment. The market's just going up, and yeah, unless there's a clear sign, don't go short.
Okay, so a very clear view from Daniel here. Just don't go against the trend, right? And again, referring back to the sentiment analysis that we were looking at, we've seen that a lot, that in the run-up of elections, markets go up, and when they if you get the facts, when you see a pullback. But we haven't really seen any meaningful impact on the US stock markets, right? And that is definitely reality we have to face. And on the side note, I think an advantage you have with a CFD broker right now is with all that potential flux in the currency markets, you can quite easily tap into the opportunities being presented by other markets without being impacted by maybe a changing in conversion rates. But I mean, for example, if you trade in euro, and we had this big run up recently, and you fear that the market is moving down, and when you get invested in US stocks, and maybe the stock moves up and the currency moves down, and you probably have to pay also a significant fee for the conversion, definitely more than you have to pay for a broker like Valutrades, then your performance is probably sucked up. So CFD is probably a really good way to position yourselves in these markets. Before I conclude the webinar, any other recommendations, Daniel? Any other suggestions to the traders from Germany?
Just keep an eye on your risk and money management, especially if you know there's an event coming up. That's all you need to survive on the markets. Most of the traders, they focus on getting into the market and get best entrance into the market. That's not really important. If you know what happened in the market and you downsize your position, you have the opportunity to survive in that in that level of high volatility.
Brilliant. So thank you very much. Let me just summarize what we've discussed then today. So first of all, we looked at the landscape, political landscape in Germany, and we talked about the different candidates and the parties. For a trader, it's all about scenarios. So the most likely scenario number one is a continuation of a grand coalition between Angela Merkel and the German version of the Labour Party. And that would definitely signal continuity and stability to the market. The second scenario would be what's called the Jamaica coalition, something between Angela Merkel, the Greens, and the Liberals, which would probably create a bit more conflict because they are at literally different ends of the spectrum, political spectrum, and markets would start asking questions, but we would not talk about the integrity of the remaining European market, right? And then we have this one surprise scenario, as I said, low, or Daniel said, low probability, high impact. If the left wing, the Greens, and the Labour Party, the German SPD, gain more votes than anticipated, and the CDU loses, then we would have that complete surprise scenario, and Angela Merkel would not be the chancellor anymore, kind of come next Sunday. A side remark on the polls in Germany: they are scarily accurate. Actually, they will probably be a little bit of back and forth, given we have so many different parties kind of in the running right now. But the polls that you see at 6 p.m. CET or 5 p.m. UK, the exit polls, they are scarily accurate, and not a comparison to what we may be used to in the UK or in other countries. So have a look at that and see how the market then reacts when it actually opens in New Zealand on a currency basis, and when later we have the futures and the stock markets openings on Monday. Following that, we've discussed the DAX. We discussed the French 40, the CAC 40, as a really good template, where there's a lot of risk and anticipation in the market with Le Pen when Macron won. And one could have expected like a run-up in the CAC 40, but what has happened is actually quite the opposite. We had this decline, right, over a couple of months. So don't bet the house on markets going up, because sentiment analysis tells us that often that is quite the opposite. Buy the rumor, sell the fact is probably the leading theme here. And then we had a look at Euro US dollar, Euro GBP, GBP US dollar, and hopefully being very clear in terms of our scenarios and expectations. So as I finish with this webinar today, Daniel, anything more to say?
Just thank you for having me here, and it was great talking to you. And yeah, always happy trading.
Fantastic. Thanks, Daniel, for joining us. I think it was a perfect topic for you, and I look forward to having you on again. And thanks for everybody who's listening live or watching the recording. Thank you.